Hi, Alpha Capital family. Welcome back to Alpha Reacts with me, Planty. We're going to go through a number of popular videos on social media and give our reaction to them. So let's start with clip one.
So I'm in a bit of a unique spot. I'm 18 years old, and I'm actually, I trade futures. I'm a day trader, and I've recently started making a pretty large amount of money, and I just want help, managing it correctly and making responsible choices.
When you say you've been making a lot of money, tell us real dollar amounts.
Well, I've been averaging about $15,000 a week for the past 5 months.
Okay.
This past week, I made $25,000.
Wow. What'd you start with?
So how I actually trade is I'm a funded trader. I'm actually treated as an individual contractor, and the firm provides me with capital to trade with after they've evaluated me. So really, I just paid for that evaluation fee, which was only $150.
So you're not investing your own money?
No.
How do you get paid?
So they take commissions off my trades, and then they give me the rest.
So what's the rest? What do you get?
It's a 90-10 split. I get 90%, and they get 10.
Wow. Listen, lucky
That's
ducky.
wild.
Lucky ducky. And I say that on purpose because I feel like this is sheer luck going on right now. And I only say that because a lot of the statistics show that day traders, statistically, it's like less than 5%.
97% of day traders who persisted for more than 300 days lost money.
Wow. Well, obviously there's a lot of industry classics there for us. We're a simulated fund firm. It is true. We've talked about it many times. People do lose, but those stats, when they talk about 97%, that is on average everyone. So that a lot of the time those people are winning as well as losing. It's just in the number in aggregate. So it's possible to do this, and it is possible to make big money. That's what we've always told you. If you're disciplined, blah blah. Sounds like he's up for 270,000, doesn't he? Then 60 grand a month, 5 months, and he's taking a 90% split. I'm slightly shocked that the great Ramsey show weren't aware of this wonderful simulated prop industry, but here we are. We like the Ramsey show, and we love simulated props, so no problems there. And they're right to point out the risks, but there is big upside if you get this right. Let me not put you off. Dr. Powell.
Good afternoon. My colleagues and I remain squarely focused on...
Funny enough, that looks like the technical and fundamental debate all in pictures, and you've got a guy set up there trying to trade on the back of something Powell's about to say. In the preamble of whatever conference that was, most of the detail will be known. That's probably why on the screen it's already reacted negatively. When people criticise trading fundamentals, it's on situations like that when you're trying to trade in real time and trying to make sense of what's been said. If you don't know the context of what Powell's already said, what's actually already been released, the market instantly is ready when those headlines come out to reevaluate consensus. That's why you get the movement. That's what often takes people by surprise. The movement is completely different to what the headline looked like. Often you need to go and dive down. We encourage you to go and look. If it's a piece of data, go and look at the fundamentals. Beneath that CPI last week, for instance, the CPI number was down, everyone's celebrating, but the main component of it, shelter, was up. You need to be aware of that for the next time that comes out. There's a big danger that CPI could bounce back next month. Be aware of fundamentals, but don't necessarily expect to trade them profitably, instantaneously, as someone's making a speech. And in any case, in most accounts, you shouldn't be trading the news speech anyway, as you probably know.
If you have 3 losing trades, you turn your machine off, okay? Otherwise, the psychology of trading, it's called revenge trading. I gotta get back what I lost. You start trading irresponsibly, and you end up going home down, not 150, which is what would have happened if you turned the machine off, but you're down $3,000 or $4,000. Okay, so never revenge trade when you'll come back from a bad day. You'll come back from a bad week, but you'll never come back from being up $500 and by the end of the day you're down $8,000.
I love the hyperbole. We were down a few $100, down 4, down 8, but the premise is spot on. Once you start misreading the market, your positions go wrong. They're going wrong for a reason. Reevaluate. Don't revenge trade. Look at that. Is it the right trade to be putting back on? Often people say don't carry on trading. If you can go back and evaluate and that you're completely right, but you've had a few wicks against your erroneous headline, then there is potential for you coming back. But once you hit that losing run, it is very difficult to stop it sliding, and the emotional side of it is tough, and you will end up sliding loads of money out of the machine. I've got no problem with what he's trying to tell you there. Slightly excitable, but that's his style, as we know. We've seen him many times. Walk away. You've got to have a plan. If your plan is to have 2 or 3 losses on a day, don't fight it. You know, you've got that plan for a reason. What we want to see you doing is gearing into winning days. Don't just stayed. When you're hot, look to gear that trade. Don't necessarily just keep it plain vanilla. But when it's going wrong, walk away.
Yeah, people think putting a lot of work in means, oh, I need to be taking 30 to 50 trades a day. No, it's really not the case. Putting the work in, like forward testing, back testing, working hard on learning the strategy, learning the concepts, nailing the concepts. Working hard's not over trading, over leveraging, taking 15 challenges. No. You know, stick to 1 to 2 trades a day. Work hard on other areas, like reviewing your journal, back testing, forward testing. Make sure you're journaling. Make sure you're doing the right things. How can you improve? You know, that's working hard.
Absolutely spot on. Can you argue with that? Work hard, work smarter, not harder. That's the key. Make sure you're doing clever things. Learn as much as you can. He's quite right. Got so many gems and quality information hidden in your journal if you've been doing one, which you should be. And that doesn't necessarily have to be in the systems. You can just make that a blog of the week. Keep an eye on the fundamentals, keep an eye on the technicals, write down what's been happening. Of course, as you said, back test and forward test. Forward testing is often, for some people, just as important as the back testing. They want to make sure that their model is predicting things how they'd expect. Really, really clever, insightful thoughts there. He's dead right. Overtrading 50 times a day just gets lost in noise, and the accounts just tend to get lost, and you start introducing bad habits and bad psychology. So yeah, leave that alone. Work smarter, not harder.
From what you've learned now, what are the traits of a successful trader? First thing is going to be extremely stoic mindset. If you win, cool, that's why you took the trade. If you lose, cool, that's why you only risk a certain percentage of the account. No big deal. Second is going to be patience. A winning trade is not going to come every single day. It's like a great business opportunity. You're gonna get a bunch of them that get thrown at you, but not all of them are great. You have to be very selective with the type of opportunity you invest into. Same exact thing in trading. Just because the market is open 24/5 doesn't mean that you should be trading 24/5. You only take the trades that make sense. And then the third is going to be risk management. If you don't know how to risk money properly, you're done for, honestly.
Well, all things we've already spoken about. Yeah, the risk management, absolutely key. Make sure that you're still in the game. Make sure that you're actually using it when you're hot, when the trend's in your favor, when you're winning. Rein it in. Make sure that you're only risking enough. Keep your plan going accordingly to how you set it up. Stoic. They're dead right. It's that trying to introduce that psychological element whereby you're indifferent to a win or loss. That's because you know over time your setups have an edge. If they don't, then it is a flip of a coin. That's a gamble. You can more or less just come to screen whenever you want. As they're saying, let's pick a time and a place. Markets are almost 24/7. He's talking 24/5. Some are 24/7, like your cryptos. Stocks are moving that way. Patience, it's something that I always talk about. If you've ever come through kind of background in stocks, you know that you have to be patient. It sometimes takes a long time to make people come around to your view. All views are in the market at any one point. Which one is leading? And that takes time. Often you might be too early on a trade. It's making sure that you can stay in it. You might end up being right, but coming into it too late to make money. You have to recognize that and know when to cut. So all of those spot on: risk management, patience, attitude. Absolutely can't argue with any of that.
I love games and I love winning, and I played a few and I won a few. But if you let that game become all what you are, if you make everything be about winning and losing, you will lose things that are much, much more important. Try and take a step back every now and again and remind yourself there's more to life than just winning the game.
Well, he's already mopped up on question time, hasn't he? And he's nailed that one as always. Yeah, let's have a balance to that. The whole point of being a trader, being yourself, is a work-life balance. Not having to work for an institution. Make sure that you take advantage of the good moments when you've got money. Make sure that you rein things in when you're having a bad run. Don't spend money that you haven't got. Don't gamble. Don't borrow money that you can't afford to lose, etc., etc. Just get that balance. Make sure that your life, we've had a couple of interviews today, you'll soon see, things work well for those traders when their life is in order. That is what is important. Get everything around you in a safe and healthy environment. Trading will take care of itself. So I hope you enjoyed today's episode of Alpha Reacts. There were a lot of absolute classic behavioural traits there for you. You know, the patience, the risk management, making sure you're not over trading, getting the right setups. Yeah, I think that's an absolute classic set of Alpha Reacts for you today. leave some comments and questions below if you've got any. But if not, we'll see you on the next episode.